is already over. I mean, markets went down 30-40%, right? So I think that in the next few weeks, in the short term, you're going to see markets try to form a temporary bottom, at least for now. So like, if you look at the U.S. markets, there was a huge rally, 24% the past 2 weeks, right? So I think you're going to see markets try to retest the previous low right here. Okay. And if the market's successful in retesting the previous low, we see a more bigger bounce in the markets. Okay, but yeah, big picture, I think this is far from over. Okay, and that and another thing that's happening is if you look at Trump, he wants to reopen everything by April, Easter. I think this is wildly optimistic, and I, I think it's wrong. Because like if you look at what an early restart of the economy is gonna cost, it's gonna cost, according to some calculations, 2 million Americans are gonna die. Okay? And I truly believe that, like what Bill Gates said, I think the US is too late in trying to form a middle ground in terms of controlling this virus and restarting at the same time. That's impossible at this point. I think that what they really have to do is like what happened to Hubei, complete shutdown for 6-10 weeks. Okay? So if that happens, then obviously the effects on the economy is going to get a lot worse. Okay. Okay. So I think that in the big picture, we're at this stage. It's like a bull trap. Right? People think that we're gonna return to normal soon, but I think we're far from that. Okay. In terms of the markets, what I'm looking at right now is oil. Look at that. I mean, I think it's threatening to break below 20 US dollars a barrel. So this is a 17-year low. And I think that this is going to create a lot of problems, especially for US shale oil companies and a lot of economies like Saudi Arabia, the Middle East, and a lot of countries that are dependent on commodities. Okay, so we keep on talking about a possible credit crisis. So of course you need to monitor the ETFs, bond ETFs, like for example this EMB. This is emerging market dollar bonds. Okay, so it's a pullback to the 20-day. We shorted this last Friday. Okay, so you look at this HYG. So this is high yield corporate bonds in the US. Okay, so if these guys continue to sell off, despite all what the Fed did, injecting trillions of liquidity, you're gonna have a problem. Okay. Okay. In terms of other sectors, we're looking at other sectors in the US that haven't really gone down a lot yet. Okay, because if you look at the energy, the banks, of course, they went down a lot. Okay, but if there's any more sell-off, then we're looking at if this is gonna spread to the stronger sectors of the market, like for example, the semiconductors, the technology. Right? And another thing I'm looking at is this one, XAR. So this is aerospace and defense. Okay. So my reason is that if you look at the budget of the US, 50% of that, 50% of discretionary spending is in the military. That's about 700 billion something a year. And I think that's the first thing that's gonna go if this coronavirus really explodes more in the US. Okay. So I think just to sum it up, we're not out of the woods yet, but short term, we're looking at if the markets can form a temporary bottom, watch the retest of the previous lows. Okay. Yeah, I think we're okay. Edmund.
Bryan, go ahead.
Okay. So I agree with Jason's prognosis of the market. If you look at what the Fed did and in Capitol Hill, they were able to sort of catch the falling knife by themselves using a billion budget and a unlimited QE. So even given the ETFs of Italy, look at the ETF of Italy, even these eight regions went up despite ramping, and even Spain, despite ramping the infections, number of infections in the US. All attention now is on the US. And I think it's good that they're ramping up the testing so you will see the real shape the of the enemy of the virus. So from there they can make a solution to how they are going to mitigate it. Right? Traders basically we're also trying to figure out the general shape of this sell-off, whether it's going to be one or a rising wedge. But what I'm sure of is because of the volatility on both ends, trading and short, it will be difficult. So 60-70% you should be scalping this. Um, there will be overnight landmines. So you should be light overnight. For me, in terms of shorts, I will be waiting for a couple of more weeks for this duration, for this to finish. And on the long end, either you can scalp within the day, uh, trying to take advantage of, for example, a counter trend trade like this, or but most of them have rallied already, or take advantage of the stronger ones. If your identity is to trend trade, the popular ones, the work from home companies like Zoom and Slack, or what else? The telemed, telemed sector. You can scalp this thing, or the coronavirus sector, which speculation that they have a cure for the virus already. Guild has remdesivir, Moderna, Codex. Look at those things. But essentially, because of the difficult market, because of the volatility, the shorter your list is, better. So you can uh, trade with a focus list um, there. Just try to keep light essentially overnight. Avoid the landmines overnight. Wait for the right setups. If you're short, wait for a couple of more days to short this as it approaches exponential moving average resistances. There.
Okay. Brian, can you exit your screen before I wrap things up?
Eleanor, can you? Thank you.
Okay. So just to reiterate what Jason and Brian was talking about, our viewpoint is very simple. I think we're like what Jason said, we're still not out of the woods. We don't know if this is over or we have seen the worst. But what we do know is that we've seen the initial panic selling and the irrational selling that has happened, and you've probably seen a short-term bottom in the short term. And what we're closely monitoring and watching outside basically is your dollar, your DXY, your bonds, and most of the. So it's two things: it's the dollar and the bonds that we're watching closely. If you take a look at the Philippines and what happened over the last 4 weeks in the Philippines, you pretty much seen a 50% sell-off all the way to the low of 4,000. And altogether, you've seen irrational selling take apart as you see ADX go 80, way above 50 in the short term. Now, almost 3-4 days ago, I gave a short list of a couple of stocks that you can start buying or start probing, especially for the short term. So our parameters are very simple. Focus on the big caps. So if you ask me, there are only like 3 or 4 stocks that are worth buying. So obviously you have your AC, SM, BPI, BDO. Okay. You can include URC or some of the other banks, for example, like Metro Bank, because those are the companies that have liquidity, especially in the short term. I highly advise people to avoid illiquid stocks, avoid small caps, avoid mid caps. Even though most of these companies have been sold off severely, one thing we do not know is that whether you might see an absence of seller. The problem is you might also have a lack of absence of buyer. So you don't want to be holding onto these stocks, especially when there could be still more downside. Now, the reality of the situation is that we're trying to wait for volatility to start dying down. And these next 4 weeks are incredibly important to us. So we don't know what type of duration this rally is going to look like in the next 4 weeks. We don't know if it's going to be a high or low, and you'll probably have a 0.382 or a 0.5 retracement. Or the worst thing that can happen is that we'll find a duration here at the bottom end of the range. And if that happens, obviously that is not ideal for most of that situation. Okay. So watch carefully what's going to happen in the next 4 to 6 weeks. As to what my personal opinion is, I'm waiting for this retest, what's going to happen in the next few days, stabilize, wait for that first uptick or that ODR, and then buy the next day. And my rules are very simple. I'm allocating probably 0.51% VAR on 2 stocks, 1 or 2 stocks. That's about it. That my exposure will probably be around 15, 20%. And my time frame is approximately 2 to 3 days. In fact, on the first day of the surge, I always tell boss I'm always selling half already. And for me, these are no-brainers for me. If our ability to scalp, because the ranges are very big in this scenario, 1 day is more than good enough for me. So don't expect markets to run away, for example, back all the way here to the 50-day here on 6566. I highly do not believe that we will see that type of rally. If it happens, okay. Pag wala, let's just try to scalp the market as much as we can in the next 4 weeks and stick with that. So I'll show you some stocks. So for example, if you look at most of the big caps, SM rallied severely, ADX above 50. Ayala Corporation rallied also severely, ADX above 50. I was choosing behind BDO, BPI, and Metro Bank, and I should have bought BDO because BDO rallied the most. Okay, but so same thing, ADX above 50, waiting for the first uptick. But unfortunately, I picked Metro Bank, but it still went up, so okay lang. But the problem is with Metro Bank, it's still the cheapest. Obviously, I think it's like 40 cents price to book on that end. But nonetheless, most of these guys are still here. And some other consumer staples like URC are also ADX above 50 and probably be on the priority list. Okay. You'll also have your energy sector. I like the energy sector as well. I think they'll probably be more defensive in nature. Maybe not Meralco, but the other power generations companies. The sector that I'm not confident in, and maybe some of the other traders might have a different opinion on it, is the property sector. I think the POGO is not fully factored in, plus most of the consumer discretionary. So what do I mean? Is that luxury, property, automobile sector. These are sectors I'd pretty much avoid in the next 6 months to a year. Okay? I don't think even if this is over, how would I put it? Even if it's over, this coronavirus is over, these will probably be the least sectors that people will start prioritizing and buying into. Okay? So again, these are actually times where fundamentals becomes very, very important. So picking the sector, being defensive, picking the big cap, picking the high liquidity are going to be the most important in this type of environment. Okay? So good luck, everybody. This is not the end of the world. Don't worry, we will make it through this, and we'll try to guide you guys as much as we can in the next 4 to 6 weeks, or hopefully until this coronavirus becomes over. Okay. So we'll start answering questions on the floor. Do we have any?
We have one from Justin Regino. I'm going to unmute Charles right now, okay? Because Charles will be in charge of answering your question, if that's okay. So the question, okay, let's see. Charles, are you there?
Hello. Yes.
There he is. Okay, perfect. Thank you. All right, Charles. So based on the banking sector report published by COL today, their base case scenario is a 3-month enhanced community quarantine for the Philippines. What is the basis and probability for this? Thank you.
Well, sorry, my son's bothering me. So, the key thing to note, I guess, is that no one really knows for sure how everything would go from this point on. So, but having said that, the 3 months was based on China's own quarantine, which lasted 2.5 months, if I'm not mistaken. So it's really just the base case for us. If ever the quarantine extends to 6 months or wag naman, but yeah, longer than that, we will adjust our forecast also for COL. But yeah, that's just really just what we can estimate to the best of our abilities as of this point. A probability, I personally would say maybe 50-50. I don't know. I really don't know.
Okay, thank you, Justin. Justin saw it. Justin heard your answer. So perfect.
Okay,
Edmund?
thank you.
Thanks, Charles. Anything else?
No, that's it. I think that's our one question for this session.
Okay. Maybe for those asking about investors, since boss is here, Chairman, maybe you can provide input on investors.
In 4 minutes.
Okay, I think you said it all. No, most of Jason is. I think the biggest question is it going to be a wedge rally or it's a flat rally? So those are the two things that are very critical for us. No, but I think like we discussed so many times is that it's better to be late than early. No? So the strategy I'm using is basically I'm just scalping. I'm not really doing any accumulation or looking at all these cheap valuations that's happening today. So mine is still a setup similar to what you're doing. First uptick, then by the next day, then I scalp it. So both sides, I go short and I also go long. So, but it's one trade a day. It's just I just pick 1 or 2 trades. I don't overexpose myself. So it's always the same. It's a 0.5 or 1% bar. If I'm going against, let's say for example, I'm going long, I probably would use 0.5 or 1%, no, just for this move. But if I'm trading always using 0.5% now because I try to accumulate the scalping, not really trying to go for the jackpot because in today's environment, I think if you're going for the jackpot, I think it's really. I think at least the irrational selling is over, right? So you have to remember, going forward, you will see a lot of going choppy. It's just going to be bottoming out. It's a lot of choppy. Now, the bottoming up can only be two ways. Now, one is it's a rising wedge, or it's an L, meaning it just stops there. I mean, stays at the 20-day and just goes consolidation, goes sideways for the next 4 to 6 or 6 to 8 weeks. No? So it's a buy low, sell high, or if you want resistance, then you short it down. Only when set up. These are all setups that are very, very important. I think the biggest challenge with most people is that if you're an active trader, I start an investor, which is Caylum is an active trading environment. You really have to have rules, no? Because if you don't have rules, basically you win, you lose, you win, you lose. It's just a lot of you just go round and round. No? So once you understand the certain rules, then put your tight stop, and then before you go to sleep, I think you have to cover your shorts, or if you want a long, I think you have to sell your longs also. Yeah.
Okay. I'll answer the question really, really quick. Is it recommended to short the US markets at current levels given the jobless data, but the market rallied big? We don't know yet. I think that's the important part. But what we do know is that the irrational selling is already over. So actually going into the irrational selling, we highly advise people to not short because it was way oversold. Okay. So what's important is that now this rally is happening. What's going to happen is that your winners and your losers are going to be separated. And I think that's the important part. So yes, we can start shorting, we can start figuring things out, but what stocks to short. But these are very important times for us to start watching. Okay. Regarding MBT and URC, because these are stocks that haven't gone up yet, and I mentioned them a while ago. Remember, when you're doing any capitulation strategy, you want to make sure it's tied closely to what the market is looking like. Okay. So if your market, for example, is overbought in the short term and there's no retest yet, I highly advise you to watch the index first. Okay. Watch the index first. If it starts to calm down, and you'll probably see your ODR, and then look for the individual issues. Please don't do it randomly just because hindi pa tayo umaakyat tapos yung market mo pababa. Okay, these are very unadvised. So our view is that always try to look at this from a top-down point of view.